This is episode 1104.
It's important to always keep your eye on, are we doing the right thing for the long term, not just the short term as we carry forward? And part of why I think we've had the success we have is we've tried to keep it simple, right? We've been clear on the strategy, right? We've been very clear. We have eliminated many of the distractions that the broader Cardinal family was addressing before this management team came together. So we've kept it simple. We've been very transparent externally. What are our metrics of success? And by the way, those are the same metrics of success we have internally, right? And so having alignment of what have we got to get done has been super important to motivate our teams to drive our decision-making process as we carry forward.
Hello, everyone. Welcome to CFO Thought Leaders. Today's guest is Aaron Alt, CFO of Cardinal Health, who is leading the healthcare heavyweight through a transformative period. As Cardinal Health approaches its second anniversary since its first investor day under Aaron's leadership, the company, we are told, has made significant strides with a strategy focused on both organic growth and strategic acquisitions. You'll hear Aaron reflect on deploying billions of dollars to expand Cardinal's presence in high-margin specialty distribution and services, while at the same time driving long-term value as well as growth. You'll hear about that and much more on today's episode. We'll begin after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Aaron Alt is with us. He's the CFO of Cardinal Health with over 20 years of leadership experience in finance, operations, and strategies. He's held senior roles at major companies like Target and Sara Lee and has led transformative initiatives across industries. At Cardinal Health, he's been leading the company's financial strategy through a transformative period of growth, acquisitions, and enhanced shareholder value creation. Aaron, welcome back.
Jack, good to see you. Thanks for having us.
Yeah, so a lot's happened over the past year, and thought maybe we could begin by just asking you to reflect a little on what some of your key milestones. What would those be? Share them with us.
Sure. Well, we have a couple of important dates coming up. We're approaching the second anniversary of our first investor day as a management team. That'll happen June 12th. My boss, Jason Haller, our inspirational leader, is approaching his third anniversary as CEO of Cardinal Health. And I'm working real hard on getting to my third anniversary as well, just after the turn of the year. And it's time for us to take a step back and reflect and talk about, what all has been going on. And, we've had a lot going on. All right, since we last talked, we've done 5 pieces of strategic M&A. We've deployed several $billion of money inorganically to drive our strategy across key parts of our business. We've invested more than we ever have before as a company in our 50-plus year history against driving organic growth. And we've also given a lot of money back to our shareholders, both in the form of a growing dividend and increasing share repurchase. So those are some of the metrics and some of the things that we're keeping an eye on.
Some of what you highlighted in our earlier discussion was the importance of a strong balance sheet and growth-focused, as part of a growth-focused M&A strategy. Can you share with us how have these recent acquisitions aligned with your long-term growth plans?
Yeah, great question. Anytime as CFO you deploy more than $5 billion in acquisitions, you take a deep breath and look at the business case and make sure that I've got line of sight, that we've got line of sight to how are we going to create value with those funds, because otherwise we should be deploying them organically or giving them back to our shareholders. In our case, we have done 5 pieces of strategic M&A, and I call it strategic M&A because 2 years ago at our investor day back in 23, we were very transparent with Wall Street that we were going to be investing in the business. We were going to be investing in the specialty part of our business, the additional therapy areas that Cardinal had a presence in, but we were looking to grow our presence in specialty distribution and related services because of its higher margin, higher growth than our core business. And, in the world of tell people what you're going to do it and then report back, part of the joy for us as we approach our next Investor Day is doing just that, reporting back that we've done just that, and that we've done a number of strategic, significant acquisitions that have grown our profile, grown our exposure to specialty therapy areas like gastroenterology, like urology, along with some technology elements to support those parts of the business. So we're quite excited about the inorganic elements of the portfolio. And as you point out, it's enabled by the strong balance sheet that Cardinal Health has. The team has spent the last several years paying down debt so that we'd be in a position to take advantage of the strong cash flow we have to now invest right back into the business.
So I saw that the company has raised its fiscal year 26 per share operating profit estimate. How does this fit into the larger growth story you're crafting here for Cardinal Health?
Yeah. Well, we've been blessed in the last couple of quarters with some success where we've been able to consistently meet or beat the expectations on the outside. And at our Q3 earnings, we did raise our guidance for fiscal year 25 and provide some initial perspective on what's coming for 26. And, the in-quarter results, the short-term guidance updates, they're a sign of progress. They're a sign that we're doing what we said we were going to do, but they're only one signal, right? We look at both the quarterly results, but more importantly, are we investing for the long term? Are we generating the cash? Are we deploying the cash in the right way so that it's not one quarter of success, it's a series of quarters of success, as we carry forward? Because one thing that Jason's very clear with his team on, and we try to be very clear on externally, is we're going to tell you what our strategy is. We're going to tell you what we're going to do. We're going to go do it, and then we're going to report back, and then we're going to do that all over again. And so every time we have a quarterly earnings cycle, that's our goal, is to report back on how are we doing against the commitments we made to all of our stakeholders.
You have participated in numerous transformations in the past. So this is not your first rodeo. You've participated here before. You've communicated these types of really complex growth initiatives with analysts and the Wall Street community in the past. But is there something that you've learned during this one and in this space in healthcare?
I'd offer a couple of lessons that I've learned. The first is healthcare is a highly regulated industry, right? And that adds layers upon layers of complexity on top of layers upon layers of complexity. And so making sure that you have a strong team that knows not just our business, but knows the regulatory environment, that knows the competitive set, that knows our customer profiles, our patient profiles, that is essential to be able to drive transformation in anything which is healthcare related. So the strength of the team is important. Also understanding the not just the current state, but what the future state might look like. And we need look no further than the daily headlines around potential changes coming out of Washington, D.C., to understand that healthcare is a rapidly evolving landscape. And anytime you're doing a transformation, you have to keep your eye not only on our own horizon, but on the broader horizon and the ecosystem to make sure that we're moving in the right direction.
Yeah. Just given the challenges there in the macroeconomic environment, you folks have continued to maintain that high stock price. Again, it comes, what factors do you attribute to being able to do that? I think it's kind of obvious. It's the communication. It's what we've been talking about here, but something else.
Yeah, I'd offer a couple of thoughts. And from a metric perspective, since my boss, Jason Haller, was named CEO, the stock price has tripled. Since I joined him a couple months later as CFO, the stock price has doubled. And indeed, since last time we talked, Jack, the stock price has gone up 50% or so. And so, look, that's just one metric of success. If you go back to what I said before, it's important to always keep your eye on, are we doing the right thing for the long term, not just the short term as we carry forward? And part of why I think we've had the success we have is we've tried to keep it simple, right? We've been clear on the strategy, right? We've been very clear. We are We have eliminated many of the distractions that the broader Cardinal family was addressing, before this management team, came together. So we've kept it simple. We've been very transparent externally. What are our metrics of success? And by the way, those are the same metrics of success we have internally, right? And so having alignment of what have we got to get done has been super important to motivate our teams to drive our decision-making process as we carry forward. Along the way, we've managed to celebrate a couple of wins. It's certainly a little bit of winning goes a long way from a cultural motivation perspective, and that has certainly helped as well. But then also, we've been willing to make some mistakes. Not everything has gone perfectly, and just being transparent about that, back on the tell people what we're going to do it and report back. Just being clear on where do we have more opportunity as we carry forward has been a key part of the success. I look at the one metric of success, the stock price, and believe that part of what's going on is that people are expressing confidence in the management team that what they see is what they get, that will be transparent with what's going well as where we have the opportunities. And I think what Wall Street sees is that they see we have more opportunity in front of us than behind us.
This being a CFO podcast, I need to ask you about this. I think we might have touched on it last time. You have worked alongside many different C-suite personalities, many different CEOs. Jason Holler, what's interesting here for our audience is, of course, was a CFO. He came up sort of a traditional finance, more traditional finance than yours, Aaron, perhaps, his path. And he steps into the CEO suite. Tell us something about any reflections on working alongside a former CFO, CEO, versus the other flavors of CEOs that you perhaps have worked alongside in the past?
Yeah, well, I will tell you first, I have been blessed to work for a boss who actually speaks CFO. It makes our conversations a lot easier because we understand, how we're coming at a variety of issues. Jason is a super smart, very humble guy. Who's very focused on being the best CEO he can be to Cardinal Health. And so we don't have to spend a lot of time talking about who's doing what in part of the organization because I believe we've built a very strong partnership where we both know what we're trying to get done. It's in service of it's in service of the very same strategy. It's in service of we all know what the plans are, and whether it's Jason or I or Debbie Weitzman or Steve Mason or the other leaders of our business teams, our team has really come together, and that's been a real contribution that Jason has made to the Cardinal Health transformation of pulling those leaders together, and we are better together collectively than we are individually. He's been a great leader in that respect.
Interesting. We want to touch on AI with you, and I don't know if we talked too much about it last year, but it seems to become a central theme of so many discussions with our CFO guests. And just to begin with, if you wouldn't mind, can you share how has AI influenced Cardinal Health strategy for operational efficiency, and what role do you see it playing in the healthcare sector's future?
Yeah. So I'm going to be a little honest here, Jack, in that AI scares me to a degree, right? There's so much unknown about what it could do for us, as well as how much it might do from an aspiration perspective. We have started to pull AI into our operations, and there are a couple of notable places where we are testing and learning and seeking to drive faster through some of our problems by leveraging AI. I'll give you an example. We are a more than $200 billion operation that we have manufacturing sites in, I think it's more than 20 countries. We are in services. We are a med device manufacturer. We are a med device and pharmaceutical distributor. We actually own MSOs supporting physicians across the country now as well. And so that's a lot of complexity. Part of how we're trying to leverage AI is to realize that AI is designed to learn. It's designed to ingest that complexity and help us to identify what's important. What are the trends? What are the answers? What can we learn from it? And so we have now deployed AI into key parts of our operations to help us to better understand our financials, for instance, right? To help us better forecast elements of our business. We're working on test cases in AI around some of our customer service pieces of it as well, so that we're able to dedicate the human being mind share to the things that require the human beings to really innovate, create, or otherwise engage versus doing some of the things that AI and machine learning is better aligned. And so I've been getting over my own learning curve in that way to ensure that our organization is grabbing on and helping to solve our problems faster by deploying AI.
And have you given your, let's just say your FP&A leader, have you given them any sort of guidelines? Have you expressed any sort of, caution to them as they experiment or, investigate how these tools can be leveraged?
Yeah, so we are being very careful and very methodical. We have, as I said, a number of specific examples of AI already being deployed in our organization, and we've put some bumpers around it in the context of we have an internal data team who is monitoring everything that AI is accessing. We have an external set of experts who are much more conversant in how AI learns and how the systems interact with our very complicated data pools, and they are monitoring on a daily basis as well. Any results that come out of the models, that come out of the AI generation, are being reviewed by the internal data teams, by our internal finance team, as well as then the external consultants that are supporting us to ensure that the insights we're gleaning from it are appropriate for our business. We're not going to start with just absolute trust, and we're not going to release the keys to the kingdom per se. What we are going to do is we're going to give it access. We're going to let it learn. We're going to let it feed on our very large data set. We're going to see what comes out. We're going to then compare to what we think we know about our business. And then as we build trust with the capability, as we build expertise in operating it ourselves, then those same FP&A leaders that you were just referencing, then their task, and they're very clear on this, their task is to take what they've learned and now translate it to another part of the organization. Right? We have 5 primary business units, but we have a couple of dozen subsidiary business units, and so we're picking some spots to go deep and learn before then unleashing AI across the entire enterprise.
The way we see this conversation often occurring is that functional heads might be budgeting for some of these language model site licenses, and they're coming and they're putting in for maybe 100 licenses for their teams or their people. And, finance sometimes is, and they might come forward and say, and we'd like to make a half dozen hires before, the new calendar year. And finance might say, well, why don't we see how you do with those licenses and see if all those hires will be necessary? Does that reflect part of the conversation that you're having, or how is it different?
Well, I would be a bad CFO if I didn't confess that I love to count the number of licenses and then assess how those licenses are being used. But we've actually divorced that conversation from some of our key investments, like the AI projects I was just referencing, where Jason and I control a centralized investment fund, right? Where we don't want people feeling constrained by their day-to-day income statement challenges, such that they don't invest for the future. And so we accept and receive a lot of proposals from various parts of our organization on where do they want to do an investment in the near term to learn something. They have to be clear with us. What are they asking for from a dollar figure perspective? How are they going to deploy it? And what are the metrics of success? How will we assess did they do it? And then we will fund many, but not all, of the proposals in that way. And the AI initiatives are an example where we are investing for the future in doing that. And so Jason and I have direct visibility to it. And if it works, great. If it doesn't, well, then we are prepared up front to how do we address that from an ongoing cost perspective. We spend more than $1 billion in technology-related costs between capital and expense every year, right? And so AI is a small piece of that, but we are very focused on ensuring that we are getting the right return for our dollars wherever we're spending it.
All right. Is that, just to be clear, that investment fund is broader than just AI initiatives?
Yes.
Or is it AI specific?
AI is one category of investments that we're making, and we may have a sales driving activity come out of our global medical and products distribution business. We may have a specific strategy idea coming out of our your urology therapeutic MSO part of the business, or we may have a we may have a particular innovation idea in our at-home distribution business. All those things are competing for investment resources because what we're trying to set up here is the ecosystem that makes sure that people get things done they need to in the short term, but that we are creating the flywheel of investment so that we have opportunities coming every quarter like clockwork, as we push ahead. And the investment fund is a key part of that.
One of the things we're interested in talking to finance leaders about is whether their finance people, do they view them as playing an important role in AI adoption? Unlike other technology milestones in the past, whether it was the move to the cloud or what have you, it seems like finance people, FP&A professionals, just because they're embedded across the business, are often having discussions about how the tools are being leveraged to their, to help them, revealing it to other parts of the organization. Is that something that you see, or do you look at it differently?
I look at it a little bit differently in that my view is that finance leaders are actually business leaders. They are sitting side by side with the president of the segment or the head of sales or the head of marketing. And what's good for the business and helping us to understand our financials, understand our data, to make better decisions, they should absolutely be sharing those learnings and those opportunities with the commercial leaders, the marketing leaders, and the segment leaders, and that's what we see happening. And that's true for across our transformation, not just as it relates to AI projects.
All right. Well, thank you for allowing us to ask you a few extra questions there. Looking ahead, what would you tell us? What are the key priorities for the next 12 months, and how do they align with the company's long-term objectives here?
Yeah. The good news for us and for our stakeholders is that our priorities for the next couple of years are the same as our priorities have been for the last couple of years. The first is, more graceful words, keep it simple, right? We've been focused on simplifying our business model and our operations in ways that have paid dividends to us. And so we continue to focus on how do we keep it simple to drive the profit growth, the better care for our patients as we carry forward. Part of that is because we want to continue to build on and grow the core expertise we have in our core pharma and specialty distribution and services business. It's a $200 billion operation that generates a lot of our profit and a lot of our cash flow. And we have significant opportunity just to continue to grow the core of who we are, as Cardinal Health. At the same time, about a year ago, we actually changed how we operate in that we had three businesses that were kind of hidden away, weren't getting the dollars of investment that they needed, that weren't getting the management attention that they probably deserved. And those were our nuclear precision health business, our OptiFreight logistics business, and our at-home distribution business. And we actually extracted them from other parts of our organization. The three businesses now report directly to our CEO. They are able to ask for, and have asked for significant additional capital dollars. And so we are on a tear to grow those businesses aggressively. And so far, so good in that way. So that priority continues. And then we also have a global medical and products distribution business that a couple of years ago was losing a substantial amount of money. We've returned it to profitability. It's great. It'll grow profitability again this year. That's the part of our business that has faced tariffs and some of the other regulatory changes the most. And we just continue to focus on how do we drive what we call the GMPD improvement plan, so that business is on par with the broader parts of our portfolio. As all that comes together, our long-term target for Cardinal Health is non-GAAP EPS growth of 12 to 14% over the long term. And we're going to highlight a lot of these plans and indeed any evolution of our metrics as we get to our Investor Day on June 12th.
Yeah, I think you've touched on many of the new opportunities out there. And I imagine these acquisitions are going to help position the company to pursue them as well. But when we say new opportunities or areas for growth in the coming years, where is Cardinal Health headed? What is this company going to look like? What are the opportunities we should expect to see business headlines around?
Yeah, there's really three places where you're going to see us continue things. First, we like to think we're the biggest company that no one ever heard of, even though we're Fortune, 15 or so from our core pharma and specialty business. We're going to continue to grow that core business. We are national in scale, and we believe we have opportunity just to grow the core in that way. But particularly around the specialty business, whether it is increasing our presence in managed service organizations for physicians. We recently acquired the GI Alliance, the largest platform of supporting gastroenterologists in the country. We've recently made a number of acquisitions in the urology space as well. We're going to continue to grow our exposure there, both in the platforms we're acquiring and adding the practices, but in the technology we're bringing to bear some of the very AI elements that you referenced earlier is supportive of that effort. Then as you think about the other parts of the business I referenced, we call them other from an accounting perspective. They're anything but other in many respects. We just announced a significant acquisition to grow our at-home business. We acquired one of our largest competitors in constant glucose monitoring equipment, ADSG. We're going to continue to grow out both diabetes support, but also additional care needs in that way, while adding new business models to our OptiFreight logistics business and expanding our nationwide platform of nuclear precision health businesses. And so there's a lot of opportunity in front of us, supported by the investments we've made and those that we have on the whiteboard right now to talk more about at our Investor Day.
You frequently is used just in terms of shareholder value, and that it requires a multifaceted approach, like acquisitions, innovation, capital allocation. How am I doing? Is this when you say a multifaceted approach?
Yeah, you're doing great. Look, an ideal world for me is that every member of the Cardinal team has a little bit of a corporate activist in them, right? We want everyone to be looking for where is the opportunity that we've not fully realized yet? How do the pieces, fit together? It comes down to Jason and I then making some choices on where those opportunities are, but we are trying to instill that culture of everyone looking for those opportunities and bringing them to the fore from a decision perspective. The way we've attacked it so far is, as you referenced capital allocation, with the strong cash flow we have, the first place we're going to invest is we're going to invest the cash back into our organic operations, right? We've spent more money in CapEx in the last 2 years than we have in each of the last 2 years than we have in any year before, right? And that's return we expect to come, over time. We are then also going to make sure that we're defending our balance sheet. We are blessed with a investment grade rated balance sheet, even having done, 5 acquisitions. We have an investment grade balance sheet that speaks to the strength we have. And we're going to continue to defend that balance sheet as well if we need to. Once we get past that, then we have the opportunity to look at core shareholder return. And by core shareholder return, during fiscal 25, we committed that we would do at least $500 million of share repurchase, and we would have a dividend. We would maintain and grow our dividend at least 1%. That was from an initial commitment perspective, more than $1 billion of return of capital to shareholders that we then over delivered on as well, because we raised our commitment to the year to $750 million of share repurchase. That's really the baseline. And then anything that's left at that point, we believe we need to be good stewards of our financial capital. And if we have more left beyond what we need to run the business day to day, we'll talk about additional return of capital to shareholders or additional M&A. There are a lot of opportunities of things we can see out there to do with our financial resources. For us, the harder choice is how do we prioritize and how do we ensure we're getting the return we need to on any investments versus giving the money back to our shareholders.
What comes to mind for you when we ask for a finance strategic moment?
There have been a number of experiences in my career which have really highlighted for me the power of finance to influence the strategy of the companies I'm working for. And a good example I would give you is I was working for a large retailer that had pharmacies in store. And the reason to have pharmacies in the store, it wasn't a healthcare retailer, was because it drove traffic into the store. People would come in for their prescriptions and they would shop the rest of the store, and it was a very reliable traffic driver. Yeah. But from a finance perspective and from a company perspective, no one really knew, did we make money or not on that part of the business? It was never measured as a discrete part of the business. And then regulatory change happened and capital costs started to go up and labor costs, a shortage of pharmacists came into the marketplace. And we started asking the question, well, are we any good at it? We know that customers like the convenience. We know that we are award-winning from a design of bottles for our prescriptions, et cetera, but can we afford to do it? Are we making any money on it? And it was an example where there was firmly held belief that we were the best at what we did. There was firmly held belief that it was critical to our business, and the firmly held belief that we were the only ones that could do what we did, and our guests would reject anyone else participating in that process. Now, where finance came in was to, for the first time, really dig in and understand what is the detailed P&L, of that business from an interior box perspective. How much capital are we actually spending? And here's the really important part. What's it going to look like over the next 1, 3, and 5 years, given increased complexity, regulation, and spend? And over a thoughtful conversation with management, we came to the realization that we couldn't do it on our own. And so for the first time ever, this retailer was willing to actually contemplate having someone else operating inside the broader box, right? A third party coming in partnership to operate the pharmacies, to try to ensure that the traffic was maintained, that the guest experience was still excellent, but taking it out of the hands of control, of the retailer. And that was hard strategically to get the organizational line to do that. But the numbers told the story, the numbers conveyed the why, and ultimately the company decided to push ahead with the initiative. I thought that was a really powerful example of how finance really is a core part of the company's strategic development.
I would just like to have you reflect again, stepping into the role you did at the time you did. Again, Cardinal, one of its businesses or what have you, wasn't doing well. There were quite a few skeptics and not some friendly business headlines around the company. When you stepped in, it wasn't a role that every CFO might have taken. And just given your unique background, it seems like you were, for all of what has taken place and the transformation that needed to go forward with, you were the right man. But tell us about that decision about stepping into the role and why. Again, not every senior, seasoned CFO would do it. You did. Why?
Here's what I would say to you. When I was thinking hard about coming to Cardinal Health, I was looking for a couple things. First was I was looking for a business that had a lot of complex problems to solve. That's what keeps me coming back to the office every day, which is I'm looking for a place where I can have an impact and help to drive some value creation in a complex business environment. And let me tell you, Cardinal Health has got that everywhere, right? And so that has been a positive. The second thing I was looking for, and I was very particular about this, is I was looking for a management team that I thought I could be a good part of, that I thought would be supportive of a transformation, that I thought that could drive that progress against the value creation. Because I've worked at a lot of companies and seen a lot of things, and if you don't have the right team engaged in the strategy and pursuing the same objectives, things don't go as well. And, my assessment of the management team, Jason, his direct reports, all of whom are still here, we're all still together, was just that we were a team that would work well together to drive that progress. And so that has been exactly what I found as we carry forward. And then lastly, what I tell you is what I was looking for is to ensure that we had the opportunity and the resources to get some things done. And we've just talked about the balance sheet that Cardinal Health has. We're able to take a long-term view on a lot of things. And as I think about value creation, as I think about my part in playing in value creation, I really view value creation as a bit of a relay race where we're coming out of the blocks hard to assess where do we have problems and what opportunities can we get like that. But the next couple of parts of the relay are either speeding up or slowing down to make sure that we are investing the dollars in the right place so that by the time we get to the end of that relay, we're able to run into the tape hard, having created a significant amount of value, right? No one person, no one CFO can do it themselves, right? It's a team effort that we have to be able to deploy against it. And it's a long-term race, not a sprint. And I guess I tell you that's what I was looking for. And I really think that's what I found at Cardinal Health. We've been blessed with success so far. We still have a lot of work to do, but I firmly believe that there's more opportunity in front of us than behind us.
Aaron Alt, thank you for joining us on CFO Thought Leader.
Thank you, Jack.